Today I'll be covering three topics: interest rate rises in the US, interest rate announcements in the UK, and emerging market bonds. First, last week, the Federal Reserve in the US decided to raise interest rates by 0.25%. There were no surprises there, and markets had a neutral reaction to it. However, markets had previously reacted positively to economic news coming out of the US, particularly in relation to jobs numbers. Second, the Bank of England decided to keep rates on hold in the UK. Again, there were no surprises there. However, what was a bit of a surprise was when the minutes of the Monetary Policy Committee's meetings were released, and it became evident that there was a dissenting vote that wanted to raise rates immediately. This was a bit of a surprise, and it caused sterling to rally on the prospect of potential interest rate increases sooner rather than later. And in addition to that, we have seen longer-term bond yields rise in the UK. Third, I would like to talk about emerging market bonds. This is a trade that we have recently implemented in Coutts portfolios. Emerging market bonds, we believe, can provide value in three ways. First, there's what the market refers to as a carry trade. This is a concept whereby a dollar depositor doesn't really receive much on his deposits. He can convert that into an emerging market currency and receive 5 or 6% and pocket that difference. Second, we believe that we can also profit from the credit part of the portfolio. This means that we would benefit from the value of the underlying bonds rising. The value of those bonds are likely to rise because inflation in emerging markets are currently under control, with central banks having raised rates over the last 7 years in order to try and keep it under control. Now that inflation is controllable, the prospect of lowering interest rates in emerging markets has increased, and this could have a very positive effect on the value of the underlying bonds, especially since today they are paying a relatively high rate of interest. And finally, we also believe that emerging market currencies are largely undervalued, and they're almost at their all-time lows. And we believe that currencies tend to revert back to their mean, and as such we would expect them to strengthen. And this is another source of profit that we can make from emerging market bonds. This emerging market trade is wholly consistent with the Coutts investment principles. It provides diversification within portfolios, allowing for a new source of returns. In addition to that, it fits in with our view of seeking value where possible.